Hi, I'm Mr. Simons, and in this video I'm going to deal with a viewer comment, a really relevant viewer comment. So that comment asks about why are interest rates so low in Australia at the moment? And this is an excellent comment and something that I've been thinking about discussing, so here's the answer in video format. So the first thing to do is let's go back in time a little bit. Let's go back to the time of the global financial crisis, which occurred 2008, 2009 around the world, and Australia was affected. Now, in terms of the global financial crisis, this gives us a really good idea of what happens with official interest rates when times get tough, economic times get tough, that is. So let me give you some numbers to show you what I'm talking about. Before the financial crisis hit, Australia was experiencing a period of sustained high inflation. So prices were going up and up and up, and the Reserve Bank of Australia was steadily increasing the cash rate to try and slow price pressures in the economy, because this is why a central bank would try and increase the official interest rate in an economy, to try and slow down price pressures and reduce the level of inflation. So before the financial crisis, the cash rate, now the cash rate is the official interest rate in the Australian economy and is set by the Reserve Bank of Australia. The cash rate then affects the general level of interest rates in an economy, including mortgages, business loans, all sorts of things. So before the GFC hits, the official cash rate is 7.25%. So relatively high, very high compared to what we have in October 2019. So the official cash rate is high. The financial crisis hits and the Reserve Bank of Australia makes a series of rapid cuts in the cash rate to 3%. So during this period of global economic uncertainty and turmoil and all sorts of things happening, the Reserve Bank tries to fight off the downturn by reducing the cash rate to 3%, so a highly expansionary stance in terms of monetary policy. So let's then fast forward a little bit. Let's go to August 2016. In August 2016, the cash rate was reduced from 1.75 to 1.5%. So the Reserve Bank cut the cash rate by 25 basis points. And then the cash rate stayed on hold. So between August 2016 and June 2019, nothing had happened. The Reserve Bank was just waiting and seeing in terms of what was going to happen. In June 2019, the RBA cuts the cash rate. In July 2019, the RBA cuts again. Then in October 2019, the RBA cuts again. So in a very short period of time, in October 2019, the official cash rate is only 0.75%. 0.75%. During the most recent period of economic turmoil that affected the world, the cash rate was only cut to 3%. So why is it so low right now? And right now being the Australian economy, October 2019. So to answer this question, what we'll do is we'll go through the RBA statement from October 2019. This will give us lots of great clues as to why the cash rate is so low. What I'm going to do is I'm going to read elements here, but you will see the words, I think it's displayed here as I go through it. Okay, so the first thing to think about is that the RBA is talking about, okay, things are maybe improving a little bit, but the risks are tilted to the downside. So the risks are likely that things go that way, go worse. If we look at this paragraph here, the RBA says interest rates are very low around the world and further monetary easing is widely expected. So the RBA expects that official interest rates all around the world will also get lower, just as they have in Australia. And this is because central banks are responding to persistent downside risks to the global economy. So that point that things in the global economy could get worse, and so it would help to have interest rates that try and accelerate economic activity as the cycle goes down. and also that there is subdued inflation, love that word, subdued inflation around the world, so that central banks are easing monetary policy to speed up growth and to try and boost inflation from its current low points. Another reason why the cash rate is so low in Australia at the moment relates to economic growth. So let's go to the RBA's own words. The Australian economy expanded by 1.4% over the year to the June quarter, which was a weaker than expected outcome. The low level of interest rates, recent tax cuts, ongoing spending on infrastructure, signs of stabilisation in some established housing markets, and a brighter outlook for the resources sector should all support growth. So the RBA is saying growth is weak and we are cutting interest rates to give some more support along with these other factors to make growth stronger in the Australian economy. So a sort of a big picture view on why is the cash rate so low? It's to try and support Australia's domestic economic growth. Another thing to look at is here, employment has continued to grow strongly, good, and labour force participation is at a record high, so that more and more people are looking for work, but the unemployment rate has remained steady. So the RBA is concerned about the unemployment rate not falling, but there's sort of different views you could think about, because you could be like, well, if labour force participation has gone up, more people are looking for jobs, means the unemployment rate would be higher. Either way, the RBA is cutting rates to try and see some reduction in unemployment. Okay, here is the inflation point. Inflation pressures remain subdued, and this is likely to be the case for some time yet. That the RBA is not expecting inflation to get back into the target band until 2021. That is a sustained period of low inflation. Another reason why the cash rate is so low. If you look at how you could provide some specific justification from the RBA, you could look at these two ideas here. This could be used in short answers or essays or just in discussions with your mates. I know you guys talking about the cash rate on the way home from school. It says here, the board, so the RBA board, took the decision to lower interest rates further today to support employment, so to try and reduce unemployment and income growth, so to increase income growth, and to provide greater confidence that inflation will be consistent with the medium-term target, that 2 to 3% level. It is reasonable to expect that extended period of low interest rates will be required in Australia to reach full employment and achieve the inflation target. So the RBA saying here, expect them to be low for some time. Don't expect the cash rate to be rising anytime soon. Okay, so hopefully this was helpful in trying to understand why the cash rate is so low in the Australian economy at the moment. Any questions, any comments, put them in the comments. And as always, thank you very much for watching.